right, what's going on, everybody? Let's do it. Let me share my screen really quick. Make sure you let me know you can hear me over on the sidebar. We'll do some price reading here. So let's share screen. All right, should be all right there. Nice. And now let me come on over here and I gotta just take that. Beautiful. Okay, cool. All right, let's roll. Okay, so we just took buy side this morning, 988. Okay, that dates all the way back to Tuesday, the 16th, okay, of April. Now let's zoom out over here. If we were to go to the hourly chart just for a second, bulls played out, low, high, discount retracement, bullish imbalance, run for highs. You got a little showtime rejection here, 2 times actually from this bearish fair value gap, but not bad. We're back over 18,000 here. Okay. Now the next order of business is we are back inside our weekly bearish fair value gap. Something that would be very encouraging for bulls would be a move up and through and to ultimately close out that weekly fair value gap right there. Okay. If you've been listening to my stuff over the last couple of days, I'm kind of on the fence right now because we do have a monthly bullish fair value gap while we have a weekly bearish fair value gap. So kind of in no man's land, but we're going to make it work nonetheless. So coming back over here to the hourly, we do have this hourly bearish fair value gap here. Hold on, let me shut this window. You got to be kidding me right now. What a pain in the ass that was. All right, so we took out that 988. Now we're deeper into this bearish fair value gap here. If we look, we have a massive range on a smaller time frame too, which isn't all that helpful. But typically when you get that huge morning move or overnight move, I should say, typically leads to a little bit slower of delivery throughout that morning session. So we're just going to have to wait and see. I'm looking over at my sidebar right now, seeing a lot of names in the green, specifically these semis that we've been talking about over the last couple of days that I thought looked pretty good. For example, look at NVIDIA. My model on NVIDIA completes at 974. That's more than enough for price to get up and go. So let's come back over here. Chilling over buy side. So at this point, one of two things would happen after taking out a substantial pool of liquidity, right? And I think an hourly high would suffice in that situation. You're either going to get that imbalance up and through a candle such as this, right? Where you get that imbalance up through, helps you take out a previous level of struggle, or you're going to get a swipe, close below, and the beginning of what would be a retracement, right? So just from this point here, after completing my model from this low to that high, why is that my range? We took out this high with that price run. We got our discount retracement here. Here's your bullish fair value gap. Here's your turtle soup entry, sweep of the low. That's the trade we took yesterday. And then there's your run ultimately for new highs. So at this point, I need to come on over here and what is my new range? Do I necessarily know this is the high? No, I don't. I do not. Right? In the meantime, this is what we're working with. So if we were to get some sort of discount retracement into one of these bullish imbalances here, that would be the next place that I'd start to look, right? On the flip side of that, if we are to create some sort of smaller time frame imbalance after sweeping that high, can we look for lower? Yeah, for sure. So let's just go here. I want to map my hourly range. So I have that on this chart as well. And here it is. Okay, the low that started the price run to take out not only this high, but also these highs over here. Whoops, not that. Beautiful. All right, so clearly a massive range, right? Also of note, right? Doesn't necessarily mean it's going to be the case, but just worth noting that our kill zone low is way lower today, way lower. Okay, just again worth noting. And it's also approaching discount of our current range. So let me come on over. All right, let's see what we got. As a lot of you know already, I don't typically mash buttons until at least 10 o'clock. Prior that first 30 minutes, does it still play true? Meaning, does it still respect what we talk about here? Yeah, it does. But with the wicks, especially with a large range, those wicks can wick you out. And not only is that frustrating before 10 o'clock in the morning, but sets you off on a pretty poor start to the day. So there's your high. I also just want to peek in on dollar smoked for right now. Okay, come on over here. Good, Mara's up 5%. Where's my buddy? Where's my money, Billy Goat? Come on, man. Crazy. What else? Tesla's good. Green, nice. Upstart up 5%, very good. Yeah, the semis are all right. AMD as well. AMD, that whole earnings move just got us into discount of that weekly bullish fair value gap. See this black box here? That is a bullish breaker. Look at the low of this week. Can't make it up. Hit the low of the breaker and down. Currently up, let's see, $9, $8 from the breaker low. So not bad at all. And this is another one with the high upside potential here. There are a lot of imbalances down here, but not so worried about those with the breaker right in discount. And then here's your, obviously, NASDAQ. This is what I look at for the most part. So if you don't trade futures, this would be like QQQ. So let it shake out. Early morning still. Hey, we got a new high. So again, this is the I guess the whole point of when I'm talking about here in terms of how do I know the range is set. Right? You have levels up here. You can make a pretty decent idea and decent judgment in terms of when the quote unquote top is, right? But for me personally, I would much rather just allow it to create a smaller time frame imbalance and use that as the dictator for my trade. I don't want to try and jump in front of a swiftly moving train here. But we are getting deeper into the hourly fair value gap, which closes up at 18,084. Okay. Ultimate buy side would be here. I know that sounds pretty radical, but that's 18,350. Low probability that occurs today, but that would get you well above all of your imbalances here on the weekly time frame, and your monthly then at that point would play true. Also notice where we're running into right now, the low of March right here. We are currently right at March low. So we are preventing a monthly bearish fair value gap from forming. Very encouraging for the bulls, right? Getting up to that 18,006, that's the mark for it. So let's see. And again, I'm just going to allow this to play out, and I'll set my range once we see some sort of imbalance move against this here. Just a massive range at the moment. And I should at least draw out some of these areas of buy side right now while we wait. Okay, you got a couple imbalances here, of course, but you have, oops. This is really the main high, right? So right now what we're kind of working with at the moment is, or the question that I'm asking myself in this situation is, turtle soup or continuation breakout, right? And I kind of have to let that shake out prior to making any assessments right now. So what would a turtle soup move be? It's when you poke your head out of the shell, right, above a previous high or low, and dump, similar to this. Take out previous low, shred it up. So just have to kind of wait this out. Still not even 10 o'clock yet. Here's what I want to at least have mapped. Okay. And we know we have these 15-minute imbalances here. Good. All right. So if anybody's looking at any ticker or anything, want me to pull it up, I can do that. Just put it over in the sidebar and we'll get after it. Yeah. It seems like I always pick the best days to do these live sessions. 300-point move. That's all right. We'll see if this imbalance forms here on the 15-minute time frame. We'll come on over here. This is my second chart layout. 1 minute, 5 minute, 15 minute, all broken down. This is your little 15-minute imbalance here. But so if you're using the 1 minute, while this trade is not exactly the cleanest per se, or the highest probability, you'll notice how price reacted following taking out that high at 88, right? Broke through, retraced back down to it, held it, got into a bullish fair value gap here. Where is it? Here. Beauty. And so far so good, right? Look at the level of precision. Insane. So let's keep this train moving. Again, this same situation. I'm waiting for the hourly range to set itself. And here's where I just have a few of individual names that I'm looking at. And this is where I can put whatever names you guys are looking at. Beautiful. All right, wait a second. End phase. Hold on. I've been hot on this name for a while, and it's just done basically nothing. It sat in the same range for so long. But low, high, you got your bullish breaker, low, high, lower low, breakthrough, retracement to the bottom of that bullish breaker. Beautiful. Bounce, relative equal highs. That's why I think M-Phase has got a lot of gas in the tank. It's just a matter of time. At what point do we put our foot in the ground and start making that move higher? Could be here with this bullish fair value gap and order block right there. But yeah, ultimately, I want to see this start to get going, and I'm glad it is starting to go at this point. We're up $10 today. Just had earnings. I believe it was last week actually, but very nice move on Enphase. And then obviously my favorite setup at the moment is Mara here. I'll show you from this monthly perspective here. Here's your low to your high. We took out that high with that price run. Here's your discount retracement into a monthly bullish fair value gap. Very powerful. So far, so good on the monthly time frame. We did reach up into 20s last week following the tap, but recovering nicely today, plus 6%. Love to see it. Love to see it. But that would be Mara. So I got Mara on there. I got Enphase on there. What else am I cooking up over here? Well, I got to clean these up a little bit. Tesla, I got Tesla here. Tesla also looks pretty solid. Only issue that I have with Tesla personally, and probably why I'm not going to trade it, that looks beautiful, right? That short dated, short time frame range, that would suggest 198 is coming, right? The only issue that I have with this is, whoops, here. So likely complete my model up there at 198.87. But the only problem I have is if you were to go back to that earnings rip, right, where we made our first little price run, you'll notice we never retraced into discount. So if we're looking at it from a more broad lens, this never got into discount, and we now just have a really massive range, right? Yep. So a little bit lower probability, but my model would complete on Tesla at 198.87. But all right, let's zoom it. Good. Okay. Back to business. Oh, okay. So far, not the ideal little reaction. Oh, shoot. not the ideal reaction for bulls, a sweep and a retracement. Okay, so let's come on over here and let's see the formation of some sort of bullish, I'm sorry, bearish fair value gap. Let's come on over 15. Let me just map this range again, still without the imbalance. I don't feel like it has to go down from this point. Okay, if there's no imbalance, then I don't feel that way. I'm gonna wait and see because we have discount much farther lower. Okay, they have a big fair value gap here, but still it's about 70 points away for a retracement back into that. So let's see if we do form some sort of imbalance here on the 5. ISM PMI data just came out. Mm-hmm. Okay. Bouncing off 930 also. Not an ideal fair value gap to trade. Why? Not currently in discount of any range that we have, right? So, but can we justify? Yes. Everything can be justified. It would be very bearish to balance price range or create that imbalance through previous bullish imbalance right there. There's your. Okay. If anybody has any questions about anything I'm saying either, feel free to throw that in. So that's a bullish volume imbalance through previous resistance here for NVIDIA. That's bullish. Relative equal highs up at that 907.39. So that's really where I was crossed up a lot. There were a lot of really nice setups going into this week, despite being in a pretty vulnerable situation on the weekly time frame. The monthly looked fine over here on NASDAQ with that bullish fair value gap here at the weekly. So look at this. Oh, my Lord. Really? Oh, my God. Look at that precision. Filled that bearish fair value gap up. Look where we're chilling at. Mm-hmm. Doesn't get more perfect than that. Ain't that something? Bitcoin up 5%. Sheesh. It swept those weekly lows. Range is massive today. Oh, love to see it. There's your little sweep right there. Bang. Okay. So even if we're looking at this from an hourly perspective, of course, I want to wait for a smaller time frame imbalance to form, but you can get a pretty deep retracement here. Potentially even turtle soup these lows, and that would still be technically bullish, right? And there's your potential BPR. We wait for the next candle. If it melts down without us, so be it. It's all good. But just a way to try and get the highest probability trade setups here. London kill zone lows here. 719. This would be the first bearish fair value gap to form following that kill zone formation. So we wait. This could very well pull itself back up and prevent the bearish fair value gap from forming. I know it would be about a 50-point candle, but it's a possibility. But yes, I believe some sort of retracement isn't crazy if that fair value gap forms. So we're gonna have to wait 5 minutes to see. A lot of names just got smacked a little bit too. All right. Let's see. Let's let this form. If it doesn't form, it's nothing. Ain't nothing. I only want high probability setups. That's it. I'm not going to settle. I'm not going to try and jump it. When you start to avoid jumping it and just trying to get in because you think it's going somewhere, you'll notice that you prevent a lot of unnecessary losses by doing so. So look, this is not set in stone yet, but at this exact moment, whoops, see, look at this, and this is why we wait. That would be your bearish fair value gap. It just needs to form. If it doesn't form, I got no interest in it. Did Shopify get to where I wanted it? I don't think it did yet. Where is it? Nope. Discounted, not quite the breaker that I wanted. Chinese name's not getting whacked as much as I thought. Starbucks still looks like crap. Right, also looking good, 6% on the day. This was a secondary miner setup along with the CLSK2. But the miners look good. Let's come back over here. See how we're painting. All right, so bearish fair value. Yep, looks like it's going to form. And let's just take a peek over here at the daily. Daily got into the premium fair value gap right here. High to low, discount retracement. We're up in it. Got up in it, I should say. So far rejected. So the most ideal situation would be for this next candle to retrace up into here and ultimately reject and start its descent at this point. Even if we were to use a smaller 5-minute range, we can look like this. Dang. 50% from this point would be much farther. 9.6. There's your fair value gap. 1 minute left. As long as nothing crazy happens in this last 1 minute. Kill zone low. I'm going to just mark that. There we go. How's the screen? It's all good. You guys can see it fine. Dollar Tree got my daily. Ooh, nice. All right, I'm going to pull up Dollar Tree and we can look at Etsy also. Sorry, I just saw those. Dollar Tree. Let's see. This is our weekly, but check that. Yup. Yup. Nice. Nice. Relative equal highs above, too. You have no imbalance in between this high and that high. So ideally, at that point, you'd see a low resistance liquidity run move pretty quickly up through those. Nice. Yeah, this is a weekly setup here. Could take time, but here, let's go over to the Dollar Tree here. Oh, snaz, real nice. Check that. Close above that, you're in business, man. And then here's your Daily, that's a daily fair value gap Snaz is talking about right there. Ayo. You can balance this out today, aka close above. That's encouraging. Very encouraging for bulls. You have this, but you've already gotten into it and rejected. So to me, that's pretty filled up at the moment. You got another one here. These are volume imbalances or gaps down. Price gets into it, rejects lower. Beauty. Okay. And then there's another. That one's untouched, but not bad. That's a good setup, man. Good find. Good find. And then Etsy was the second one. I think we had people talking about Etsy at 55, maybe, if I'm not mistaken. Yeah, no, it didn't quite get there, but we did sweep. Look at that buy side sweep, right? I bet you Etsy's gonna start showing up on some what's the word? Some of these heat maps for quote unquote high volume on a day, right? Where is that coming from? Well, it's coming from taking out the stop orders from here. That's why your volume, and that's why you see on my chart, I do not have that whatsoever. Also, take a look. You got a weekly breaker, low, high, lower low, break above. We would anticipate the high of that sequence to act as a support moving forward, and you got that turtle suit move. So not a bad look either. Massive range. You got a bearish breaker up there, way higher. But I'm looking at it from a weekly perspective as well. I could tighten it up. I can look at it from an hourly, but okay. So let me just in case I'm not paying attention, just gonna set that alert. If we get it, great. There's your bearish fair value gap. This would suggest a retracement down into discount of our range, right? And your 5-minute range, much smaller than what you would see on a higher time frame, but that's what it is. Not so sold. I think we'd see retracement, but I don't think we're going to sweep and shift structure on the 5 just yet. Still got a lot of decent setups out there. Let's go to Etsy's hourly. Oofa. Yeah, so that's the thing about Etsy. As decent as it looks, massive bearish imbalance here on the hourly. That could, how do I view that really? It's just, it takes some time to get through that sucker. That's all. But I will say above that high here, 63, that would be a bullish breaker. Low, high, lower low, and I'll just zoom in so let's see a little better. So above this high right here, and you'd have a bullish breaker. Low, high, lower low, break above that 63. We can anticipate that candle acting as a support level moving forward. It also can map a trade in itself, right? So we'll leave Etsy up. It's a pretty big range. I don't think it'll happen today, but we'll have to see. Currently rejecting 930. Really no interest for me unless we get into that bearish fair value gap. I don't just trade off of air. Essentially what that means is I don't trade off of no structured entry or exit, right? At this point here, for me to enter looking for just a tad lower, I'm essentially risking half the range, and I don't want to do that. It's too much.
When you look at the buyback, I think it just speaks to our view from capital allocation. That free cash flow generation is going to continue to increase. That's another drop the mic moment in terms of 110 billion. It's going to be additive to the story. And I do think coming into this quarter, New York City cab driver was bearish on Apple. And I think the bears now start to go back into hibernation mode on the Apple story.
Not just retail, right? I mean, the active managers have been reducing exposure for years, right? What is the positioning look like?
The institutional, I think this is the most negative that I've seen on Apple institutionally, probably in 4 or 5 years. I mean, any positive that you say about
all right, sorry. So let's see. Don't add off of air. Why? Even if I think price is going to go a little lower, to add it off of a red candle like this, I'm just leaving myself open to seeing too much red that I don't want to see. If it takes off without me, so be it. It's fine. I can wait for another setup to occur. Because the beauty of this is it only really takes one. One setup is all you need. Cool, Snaz. Yeah, I want to just make sure that it's clear enough that people can see it and all that good stuff. Okay, so you know what? Let me. Oh man, look at this. End phase, 15-minute Mando model complete. Low to your high. Discount retracement. Hold on. Let's zoom in. Let's just see where we bounced it. Yeah, right here. Run for highs. Model complete. So at this point, you say, what was the price run? I took out that initial high right there. And all of this is all good and great, but not necessarily the start of a move. So there you go. So discount is still like $3 down to the downside, and you even have an imbalance down here as well. I'd prefer to look at this from a longer time frame perspective, and you left relative equal highs back here, so just worth a little note. Ideally somewhere down in discount there. Low key net is a beast, really. And then hold on, here's the Mara. I'm gonna remove some of these drawings that I have here. Bullish for value gap. Okay. Bullish. Okay. So Mara, what you're working with, this is on a real small time scale, I guess, designated for a Friday type maneuver. Why did we reject where we did? Bearish for value gap. See, everything can be justified. Every single move that happens. So 50% is at 17.52, and with the anticipation of a move back up here to 18.32. Let's come back over. Yep, see, getting a little choppy price action. So if you just were to jump on that red candle that you see right here, you're probably already in the red, right? And that's why I wait. No point in jumping it. Okay. I'm going back to Mara, keeping tabs on this sucker. Hold on. Let me just remove. So here from this point, let's just map it out. I showed you guys before, but ultimately our higher time frame is pretty bullish. There's your little turtle suit move. Okay. Here, hold on. Ready? Whoops. Low to high, discount retracement, run for highs. That's one. Discount retracement into a bullish imbalance, I should say. Bingo, there it is. Bullish imbalance, run for highs, and so on. Ready? Oops. Okay. Nope, no range setter. Oops. There she is. Discount retracement, bullish imbalance, run for highs, model complete. And then here's your turtle suit move. Right? And you have relative equal highs left up there too. Turtle suit. Right, nice. Ultimately, I would even. Yeah, this is a higher time frame range, but here's your bearish fair value gap, untouched, that we got into and are rejecting at the moment. Here she is. But again, our immediate range is right here. Oops. Low to our high. Just getting into discount right now. There she is. Right in discount. And there's your 50% of that range. I'll zoom in. I don't know if it's clear or not when I'm on the stream on Twitter or YouTube. All right, let's come back over here. All right, we're slowly melting, getting down into discount. Of course, this is our smaller time frame range. If we look at it from a higher time frame, we got a ways to go into discount. Does that mean that this is absolutely has to come down into discount right now. No, it does not. We have a bullish fair value gap here, which could get some love, could give us a bounce, right? Does not necessarily mean that this range is getting set at the moment. Not until I see a higher time frame imbalance form, right? If we're playing off a smaller time frame range, we're about to get into discount, which is a bullish fair value gap here, on a smaller blip in time. So until I see that higher time frame imbalance, I'm not really anticipating a long-term retracement just yet, right? And there she is. The scariest thing for bulls at this moment would just be the fact that our kill zone lows are so far away. That would be very, very ugly for a Friday meltdown. What else we got? Nothing decent today. Yeah, all the semis. The semis look all right. You know what? I'm gonna remove Meta for right now. We'll go. Yeah. Okay, so NVIDIA completed my model. Low, high, discount retracement, run for highs. Did we run for the highs? Indeed, we did. We took them out. Good. Okay, so let me go map this range on a higher time frame here. And I'll show you guys. This actually was back to back. So here's your first low to your high. Discount retracement, bullish imbalance, run for highs. Fantastic. Model complete. On to the next. Here it is. Yep, we got it. Low, high, discount retracement, bullish imbalance, run for highs. Done. Okay, so at this point, this is what we're working with on an hourly time frame. Does this necessarily mean it has to absolutely retrace again at this moment? No, it does not. Prefer to see some sort of imbalance to occur prior to that. But with big ranges comes big retracements, right? It's just how it works. Let's just mark that out. Oops. There you go. You're killing me. Okay, there's one. Here's your next. Here's your next. There you go. And you have a hourly fair value gap right here on NVIDIA. All right. Now, all right. So Mara satisfied the discount. Let's see how deep it gets into discount. First tap of our fair value gap, reacting a little bit. It's not quite discounted. If it goes into discount and we run back up into here, I would not personally short that. Let me get over to the chat.
I think we were due for a little bit of a payroll number after the streak that we've had of upside surprises. Our read of the labor data.
Nice, Sean. Nice.
And while I know that the market got itself a little bit offside in terms of positioning with regard, to worries and fears about.
Okay, so no discount retracement just yet. Would have preferred a discount retracement, but that's fine. Equal lows down here too. Ugh. So if you were to just short this off of air per se, right? You're just taking the trade off of hopes and dreams at this point, right? Looking for lower. Where's your target for that trade? Where's your stop out for that trade? Right? Because neither would have hit, right? You still wouldn't have gotten stopped. Probably not, right? If we were talking about this candle in particular, probably wouldn't have got stopped. You're probably either sitting even or maybe a little bit down. But where are you really targeting? Are you targeting 50%, which we almost tagged, but did not quite do it just yet? Makes it a lot tougher when you're buying it off of air. Look at that. Daily. Seems to see the reaction off these
who are some of the
levels.
unprofitable companies. They're the small companies. They're small cap. They're the emerging markets. Very interest rate sensitive. And so that's where we would be buying today. We would be
Let's see, we get into discount. This is the new week open gap, this blue level here.
And now suddenly, the belief is, oh, we can push the multiples even higher.
And then now here's your weekly. Yoicks. There she is. Filled to the tick. And we're chilling. All right, we're currently in discount. There you go. Our smaller time frame range, nowhere near discount on our higher, right? So let's see, do we create some sort of imbalance here?
We're on a sustainable path to 2%. Do I think that there are clear indications that disinflation is in the economy? Yes, I do. But look, the super core inflation numbers have been accelerating for literally 10 months straight. And we've been off for a really long
The Mara hater wants to troll. Haha.
pressures there. We know that the housing market, which is key to these CPI readings, single family housing prices are continuing to hold in there. I mean, the latest national housing numbers are up over 6%, up over 7% in urban areas.
Dummy.
So
all right.
we're wholly out of the woods yet. Let's just remember today's number, even on our average hourly earnings, as you talked about, 3.9 is less than 4, but just, and 4 is still 2 times 2.
All right, Lisa Salad, thank you very much. I appreciate it.
All right, you got your little discount here. You have your bearish fair value gap. If we were to retrace into here, not necessarily an area I would look to short after getting that discount satisfied there. Let's see. What else can we look at here? Even this, right? Even if you're bullish right now off that discount bullish imbalance, look at how structurally, right? Or what is like the trade map here? If your entry is, let's just say your entry was here, right? 908. Right? The trade really doesn't go bad for 743, right? That's way too big of a range for me. So I don't have interest in that, but there's your little discount. If you were to trade this off of blips, and what do I mean by blips? Like I'm talking about really smaller time frame setups, right? If this 1 minute imbalance forms, could you use that as the structure for your trade? Sure, right? There's ways to do it, but again, if you were to short off the air and take profits here, that's great. Congrats, you did well. If you were to hold on to it looking for more, you're probably back even, right? So that's why being able to structure a trade is much more important. But let's come on over here. Let's see. All right, we're getting our run.
Our customers' homes are taken care of. Maybe your home could do the same.
Right at 9:30. Right, 9:30 open. Let's see how price reaction. Initial reaction after falling through, we rejected it. Why is 9:30 open an important time level? Well, think about how many orders are coming through at that time, right? Think about how hectic PA is at that 9:30 open, right? Get a little crazy. Okay, let's see. Who's in here? Anybody listening? Look at that. Right off 50%. Yikes. Again, there is a 5-minute bearish fair value gap. Not so sold on shorting that following the discount retracement, especially when you have a couple other decent setups looking around the market. What's up, Turkman? Turkman, you just looking at Etsy right now?
The order prevents him from speaking about potential witnesses in the case online or outside of the courtroom. The judge fined him $9,000 earlier this week.
Struggling at 9:30 just at the moment. Oh, whoops, I need this on the one. There you go.
Says a major artery linking New England with New York will be closed for days. He says the state will have to take down a bridge over I-95.
Showtime coming up.
The governor says he hopes the interstate will reopen before the Monday morning rush hour. And China launched an uncrewed spacecraft to the moon today. The lunar lander will go on a 2-month
Is this a little 15-minute fair value gap? It is. Hold on.
which faces away from the Earth. It's expected to land in early January.
Thank you.
Check that.
Take a look at Amgen shares. They are up as much as 13%. This on
15-minute fair value gap right there.
Shares of such as Eli, or you see right there, Novo Nordisk as well, are both down. Let's get to Angelica. People, she has more on the story. Angelica.
Hey, David.
Good place to reject.
Amgen shares are up this morning after the company saying that it will advance its injectable drug for obesity into the final round of clinical
Huge
trials.
range, but
And that's a big deal for Amgen because it's trials and it's a huge market for obesity drugs. And they're saying that they're planning a broad phase 3 program, so obesity as well as type 2 diabetes. And this news came out yesterday on their earnings call. They're also saying
flushing the 15-minute fair value gap at the moment.
Develop an experimental pill for obesity, but still, investors really happy to see that they're moving ahead with that injectable drug called Maritide. Now, remember, they still need to prove that this drug works, but still, you're seeing
Massive range we're dealing with today, though. Massive. Even off that 15-minute. Right, where is it? Here. Even if you took it off of there, 62, stop, almost 100 points higher. Dangerous. Could be at least, I should say.
Sees a slower recovery for that name, which has had no shortage of challenges, down 34% in the last 12 months. What makes a comfortable retirement? It's having the money to retire on your terms. That means having a smart plan for how your money is invested, how long it needs to last, and perhaps where it will go when you're gone. Creating a retirement plan with Fisher Investments gives you the confidence your money will last while you retire. Or perhaps become a legacy. You'll also have a team of specialists in investing, retirement income, estate planning, and more. Call for your free Fisher Retire Right Kit. 3 guides to retirement income, paying for healthcare, providing peace of mind for your loved ones. Call now, 1-800-340-6251. If you're planning to retire or already there, Fisher has the answers you need, and our fees are structured so we do better when you do better. Call for your free Fisher Retire Right Kit. Call now, 1-800-340-6251. Shouldn't you retire the way you choose? If your portfolio is $500,000 or more, call us today.
Let's see, what do we got?
You made a promise to keep the line running, to power through.
I don't like how we haven't retraced here. Merit did. Let's see, where's our buddy? Who should I get rid of right now? Let's get rid of Enphase right now. Let's see how Apple's cooking it. Snaz, that Dollar Tree looks good, man. Where's Apple? Okay. All right, so let's remove this, and let me get rid of whatever else is on Apple. That's fine. All right. Again, massive imbalance off that earnings move.
The secret of smart mouth? Billions of activated zinc ions. They stop germs from producing stinky sulfur gas, aka bad breath. Buy smart mouth today anywhere mouthwash is sold. Before tax credits help transform real estate development, before $1 trillion.
Last 1 minute fair value gap here that we're working on. A balanced price range is no good for bulls.
Understood these market forces and helped our clients change the game. Let us help put your business at the forefront. To optimize
Kind of last line for bulls until this low,
stay rooted out.
893.
Assurance. Get ready to change the game.
Patients frequently come to me with a pretty personal question. Is there any way to truly eliminate embarrassing bad breath and prevent it from returning? That's when I tell them about Smart Mouth. For a healthier mouth, Smart Mouth is the solution. Stocks are in rally mode, so are bonds. Off the highs on this weaker than expected jobs report. Steve Leisman joins us now to discuss what today's data might mean for the Fed.
There. Ooh.
Yeah, it's a 1-2 punch here, Sarah. The jobs number on the heels of that Fed meeting has been restoring some confidence in rate cuts.
Bulls got some life.
Just the past few minutes by an inflationary undercurrent, the 10 a.m. ISM report. A more dovish press conference on the Fed for the first month of the jobs report. So the July cut out 38 from 20. We're still not even money. And there's the current there from the post-Fed meeting. 36.
So yeah, we're kind of we're in between two pretty big levels in terms of your bullish thesis versus your bearish thesis, right? I'm gonna get rid of this for just the time being. Looking from the 15-minute perspective, this is a 15-minute bearish fair value gap. Why is this not the most ideal short, even though we have a 15-minute fair value gap? Just due to the fact that we got into discount. Not so sure this run is over just yet, right? But if it were to occur, if bears were to step in, this is the place to do it. That's for sure. It's a really big range. It's tough to operate off of. So let's see. Maybe we turtle soup that without getting a close above. You still got 7 minutes left on that 15. And zoom that sucker in more too. Okay. 9:30 causing problems.
Good context, Steve. Appreciate that setup, Steve Leisman. Let's continue that conversation with Goldman Sachs chief economist, head of global investment research. Osius is here. As always, happy Friday. Thanks for coming in. Good to be here. You nailed the wage number. Although in a week where we got ECI and unit labor cost, are you confident in the
a bit slower of a morning with the 300-point move overnight? Hey, okay. Oh, what's up, Pistol? So because it came down already, the discount, the quality of the short went lower, right? Yeah, so essentially, here, let me pull up my other chart there, Pistol. Here. Yeah. So again, the most ideal situation would be, A, you don't have a massive range like this, right? That right off the bat, when you have that massive range, it's going to make it much more difficult to trade, right? Even if you were to take this short, and it could be the perfect short, right? I'm not saying that it can't, but what is really the risk parameters for this trade, right? It's huge, right? If your entry's off 62, your stop loss being set almost 100 points higher. That's almost $2,000 on one contract, right? That's a lot of money. It's a pretty big risk, one that I personally would not take, right? And now on the flip side of that, why is it even lower probability, in my terms at least, we got our discount satisfaction? If we're bullish, and we are, this is a bullish trend, right? We got into discount here, right? Could we reject here and head lower and get deeper into discount? For sure. I'm not saying that we can't, but why I don't feel so gung-ho about it is just based on we got our discount retracement. If this wants to poke its head one more time for another high, I think it could be justified in a fair manner, right? Our hourly range is massive too. So that's why I'm not like the most ideal. Okay, cool. You get it. Yeah. I just want to make sure it made sense. All right. Oh, what's up, Stonks? Why wouldn't you look for a retracement of the true range? What's the true range? I don't know what that means. Would you want an hourly bearish fair value gap before anticipating us melting to discount at the least? Oh, so okay. I think you're talking about like on an hourly time frame. Yep. It's just it's going to take more time for that to develop, right? And because we're looking at a small blip in time and it's intraday trading, I'm looking at the more immediate, smaller time frame, even though it could be lower probability as a result, right? We just don't have information on the higher time frame. Waiting for that hourly bearish fair value gap to form. Does that make sense? Also, just from a I don't know, logical perspective, can this happen? A retracement on the hourly, for sure, right? Absolutely could happen, right? I'm not saying that it can't, but just the likelihood of a close to 300 point move, I don't know how likely that is to happen, right? That's just the crux of it, right? If we were to form some sort of bearish fair value gap, that's a different story. At that point, I'd feel real good about it going down here. But until then, I don't want to jump it, right? Could I look to trade it on a shorter time frame, just catch a blip of this move? For sure. But in terms of like a higher time frame outlook, not all that ideal. There's quite a few setups that look still pretty good. That's another issue, right? In terms of looking bearish, Nvidia hasn't retraced into discount at all, so that would be fair. And realistically, I should have my range mapped out like this on Nvidia, but hold on there. I'll mark out some of these fair value gaps. But if Nvidia is going to expand, Nvidia also has relative equal highs above 906. Ready? Check that right here and here. I should move this one that was taken out here. So for me, especially when you have the equal highs like that, it's a little tough to try and anticipate something like that happening, right? But it did just complete my model here. And the range you did it with is this. This 50% I have here is our daily range. But if we want to break it down and look even smaller, this is what it would look like, right? So it doesn't necessarily mean it has to come down. I see no signs of that. No imbalance is formed. And until then, not much cooking for me, right? So even if you were to short this, right, you ended up getting a nice little wick out, right? But ultimately, look where you're at right now. This is slow moving. Even if it were to go in your direction at this moment, right? Higher time frame can trump this. That's the issue.
Expectations, NFIB hiring intentions. You know you're getting a game out. Very low numbers for becoming.
And we're already through the top. Now, do we see a turtle soup type move after completely filling this and taking out that high one more time? That's the question. And the answer is doesn't look like it, right? Final 5-minute fair value gap here. So model completion on a smaller time frame would come at our high of the day, which is nuts. Oh, we got Kyle here. Nice. There you go. Nice. Nice move. 15 melted. Let's see if this forms some sort of fair value gap here on the 15. And again, your daily range. 15-minute. As well as this. Hold on. Whoops.
Including over 400 technical steps. Tailor the platforms to your unique needs. with nearly endless customization and track market trends.
So the next order of business that I would potentially be interested in is, doesn't look like it's going to happen at the moment, but if there were to be some sort of little 15-minute form here, and I can look for some sort of retracement into it. Oh, you're a beast, Solus. Shout out to you. Any West Coast traders in here, respect it. You guys got to be up early for this. Cool. I'm glad Stonks. So currently mixing it in with the 5-minute. No. I'm reading the chat right now, Solus. Nice, man. Sweet. Sweet. So he's 2+. Oh, cool. I'm going to get Ryan to join in here too. Sweet. Seekers here as well. All right. I'm making sure. I hate talking to myself. So here, let's see. I'm going to get Ryan. How do I do this again? Oh, invite. Here we go. Cool. All right. Copy. Okay. All right. Where is Let's come back over here. All right, cool. Ho, 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 ho. Still moving. We'll get Secret on the mic soon.
Next week, we're going to be live from the Milken Institute Local Conference here on 12th Street. I'll be sitting down with the CEOs of local Saks, Exxon Mobil. Also, next, they're going to hear from Stephen Mnuchin, former Treasury Secretary. Of course,
Okay. Rejecting 5-minute fair value gap right now. See slow motion. You win where there's no imbalances and it's kind of a smooth ride.
You got Ken Griffin. Oh, that's a good one.
Yeah, all the big investors are there.
Yes.
Really want to hear which. He has not revealed yet who he's voting for, supporting in the election. Kind of.
Is there any chance that he'd support Biden?
Doubtful.
Yeah. So he's got something to mind on his damn. Wait till he answers the question next week. The ISM prices paid took some of the shine off the day.
If we completed a 15-minute BPR, would be a trigger. Yeah, R is not great, but but it's just a way to base the potential for the trade there. So, for example, like let's say we do create this 15-minute fair value gap, right? If it doesn't do it in the next couple of seconds, then obviously it's moot like this, right? But if it were to create something like this through a previous bearish, right? This was bearish, fair value gap right here, but market structure is bullish. We got our discount, right? And that's why I didn't want to short this, right? What would it structurally be, right? You could play the retracement in, sure. Your stop loss really isn't down until here, though. That's the problem. So you're risking 50 for potential, I don't know, whatever it is up here. This is 70, right? It's just a big range. That's the only difference, It's not days with massive ranges are a blessing, but they can be a curse, right? And there's a gross rejection there. 5-minute fair value gap, 15-minute order block, no fair value gap is forming, right? Now we're retracing, testing 930. See, like these conditions really aren't that great. Oh, cool. What's up, Vance Head? Um,
Has his whole life ahead of him. I don't want to miss anything. I want to make the most of it.
yeah. Okay. So actually, worth noting also, area in which we rejected here. Not only was it a 5-minute fair value gap, it was also that 988. 988 was buy side we took out this morning, right here, right? Yeah, no, man, don't. Just think of it this way: if you can nail some high probability setup, literally just one, you could be done for the day. All right. So to fight it, it's not it. This rejection, not really ideal for bulls, though. I gotta be honest. That's previous buy side, and it looks like there's a chance at a BPR on the 5 here. Ugh, yep. Yep.
Your trusted local advisors, backed by specialists nationwide. Did I say 12 cents?
Let's see something.
S&P is adding almost a full percent right now. It's positive for the week as well. The Nasdaq's leading 1.8%. A bit off the high.
And the melter.
Initially surging on this morning's jobs report. So did bonds.
5-minute playing out fine. That's off of that 988. Check that. Previous buy side, no acceptance, right? That's a Melsky strategy right there. That's the blueprint.
I think it is, Sarah, especially if the yield move starts to look like the near-term high.
All right.
For market yields, right around 470 on the 10-year. I mean, I think it's also the things this week that the market was kind of
large range. Let's see if we get back into this. Is a 1-minute fair value gap. But we are BPRing that 5-minute fair value gap. This could get ugly from this point. Right? Sloppy 15-minute trade. If you were to enter off of the 15, you'd still be green if you had your stop up here. But again, just a pretty big risk. You'd be risking like close to like $2,000.
So much about when and how much we're talking about easing policy by the Fed. It's much more about the soft landing. See, well, today's number was kind of.
What about Berkshire? Like, so it's off the highs. It's had a pretty nice run though the last 18 months.
Chance Tesla. 5 minutes left on this Tesla candle, but there's a chance this melts that as well. BPR, that would not be ideal. I just prefer not to see chop throughout the rest of the day. That would be cool. Hourly, no answers really, other than that sweeping liquidity there. And you do have an imbalance here, so really it could go either way.
Should be placed on. So all these things are fitting into place. And in general, I expect to hopefully hear his outlook on the insurance industry and bond.
You got to be able to recognize the market structure shift, whether it's break or mitigation or turtle soup purge and revert on range days. Yeah, you're right about that. It's just it really, to me, it's a matter of at the end of the day, the way that I look at it too is, can there be trades structured? I'm sure that there can. Does the potential for you being wrong seem out of control? That's probably the biggest question mark, right? Because especially on days like this where, to be straight, I'm kind of indifferent at the moment. I don't have a clear idea or clear draw on liquidity for myself. I could see both ways, and I feel like I could kind of justify both ways pretty well. But even if I was to be on the wrong side of things, if this trade is structured where I'm not going to get smoked, then I'm okay with that. I can live with that. Nicholas said still in that weekly bearish fair value gap too, and rejecting CE. Yep. So that's pretty. The high is pretty damn precise, right? But yeah, we rejected, which is right. This CE's got to be right around 988, right? Yeah, pretty close to it at least, right? And this is, wow, yeah, this is a previous all-time high here. Right, so we're rejecting acceptance back over that. Yep. So this is my next area of interest, right? Likely after a 5-minute fair value gap forms, if price were to trace into that one. But let's see. I think Kyle brought up Pinterest. Let me just see again. Yeah, just range showing you, right? Isn't it funny? Nick, you nailed this. Check that. Ready? Right, if you want to be bearish on a smaller time frame, right? I'm using a wider lens or wider range at the moment, but high down to your low. We took out a low in the process. The only thing that I didn't like about it was that we got to discount of our overarching range here. I've been to discount bearish for value gap, and so far so good. So that low would be target for the completion there. But let's look at Pinterest. Kyle was talking about. Whoa, Pinterest is about to finish on the weekly. There's your price run. There's your discount retracement into your bullish imbalance. See, Wick will give you the heart attack. The bodies are telling you what's really going down. There's your ripper. That completes at 4160. Beyond 4160, just that bearish fair value gap, that ultimately roadblock maybe, but not much. This is where I would get a little funky. At 49.64. Yeah, no, I feel you. See you later, man. YM being clean this morning. Yeah, so Matt, that's a good point too. With Dow, I know Ryan was looking at Dow as well. Hold on, let me just come on over here for a sec. Yeah, here. Where is it? Where's YM? I got it here. Potential for some BPR. That's nasty, right? Massive range, so again, justifiable, of course, right? This should be green, right? But you're just looking at the overall massive range that we got cooking here, right? 50% is still a ways away. But yeah, for NASDAQ, let's see. So 42 seconds till that 5. I wonder if we do end up retracing into this 5 and 1 minute fair value gap, or if we expedite down to those lows. That's the only question I have. But yeah, new week open gap you got here. This would be crazy if we got the kill zone low, really, really far away. I'm not so sure that happens today, but it wouldn't be crazy. That's a 50% retracement there on our hourly range. I'm with you. I'm thinking lower is the move. See if there's any bit of opportunity here. I just want to see this right here. Specifically, inside that 5 minute fair value gap, you got a little 1 minute you're working with. There it is. And let's just see in terms of where it actually, so it's about the midpoint of the 5 minute fair value gap, where that 1 minute lines up with.
CEO of Hasbro's when this talk about consumer spending, the company's billion-dollar bet stocks up 20% for the year.
And JP Morgan knocking an analyst price target while they're getting bullish on a quote AI upgrade cycle. First up, though, in the markets, S&P 500 up 0.8%.
Oh, no way. Seeker, I just saw that. What do you use? Safari? I guess Safari doesn't work so well with StreamYard. Oh, man. That's annoying. Sorry, I'm only gonna probably stay on until lunch and then I'm done. I just want to see if we get this 5-minute fair value gap retracement, also 1 minute, and then expedite to the lows. Another 15-minute order block paint. There's your first. There's your second.
It's just one number. I remind us we've had this discussion here. It's one number. One number is a point. We get a second number, we'll have a line. If we get three numbers, we'll get a trend. So we need to get three numbers in the right direction to get a trend. And also these numbers are not science.
Usually just keep it on this. This is where I'm focused. But man, ain't that something? How price reacted to that previous area of buy side at 988, right? Yeah, 1 minute's too far away, but if we come over here where that 988 is coming from, just that previous high that ultimately we rejected on the retracement. And this is just a 1 minute fair value gap. I'm actually going to remove this at that point. We filled it up already. I'm looking to complete on the 5 minute to the downside here. Getting deeper into discount. Again, I would have preferred that. That would have been cool. Still can happen, but I think from that point we'll reject, move lower. Oh man. Thanks there, Warzel. Just saw the message there. Yep, BPR balance price range. So I guess how I would explain it in the yeah, no, you're right about that, Songs. Not really any entry opportunity for me at least. But if you're for balance price range, think about it: a previous imbalance in one direction followed by a imbalance in the other direction. You know, what is that kind of telling us? It's clearly a strong move in order to balance previous lopsided PA to one direction, and then on top of that, you're creating an imbalance in the other. So it's like almost a double type level that you can view as a pain in the ass moving forward. You know. But yeah, this would be ideal. I'm just trying to map this out, how it would make sense. I mean, the range is just really big regardless, but to the high of that candle, it's risking about 30 points. And if you're to get into that point, again, let's just see the 49. Yeah, it's like a 2-to-1. And even for new week open gap, if that's the true target, that's way below, right? That would be close to a 100-point move. Right. I think logically this is at the very least where we end up kind of spin a doji for the week. That sounds about right. But and no 5 minute retracement. The initial 5, I guess, seems to be the entry at this point. The only thing that was difficult about that was this, how sloppy we were on the 15. Not all that clean. Nah, nah, nah.
I think it got no conversation is the tax change that was put through in 2017.
Wow, daily, check that.
You see a tax change.
Just about CE of that daily.
But if you think of the tax changes, these years are some real years where we're seeing the effect of the tax changes. What did that do? It actually increased disposable income for hardworking Americans. If you weren't taking advantage of the salt reduction loophole,
62 to 78. That ain't too bad either.
and more importantly, is we actually deemed repatriation or we forced repatriation of offshore earnings. So companies are bringing back more and more offshore money into the U.S. economy. These are fundamental changes. So when people
That was a shameless plug for that one. That was one that you did.
there's nothing shameless about it. It's actually why money being spent back in the United States. I don't think it's a plug. I think it's a very good
A little bit of a
policy.
bounce, not much.
Instead of companies investing money offshore,
Let's see if we get into this 5 minute fair value gap here.
industrial policy is being inflationary, but that's also reshoring, at least a lot of manufacturing, isn't it?
I'm kind of just swishing around at the moment.
Onshoring,
CJ, how often do you stream? During market, every now and then I'll do live streams, but I think the live streams can be really beneficial, but I also think they can be really terrible. So, for example, the last month where I was like bad was last August, and there just really weren't many opportunities, and me sitting at the screen all day really didn't do me any justice, and that was the problem. But we do streams like 4 nights a week. This is the first time I'm live streaming intraday on YouTube or Twitter. I want to give it a try. I want to see how it works with our technology here. StreamYard's pretty solid, but over the summer we were just talking about it. Maybe over the summer I'll do some more, but probably just AM sessions. Sitting at the screen all day, I don't think it's a good thing. Especially, really, even if we were to get this retracement into the 5 minute, it's not the most ideal time situation to trade either. Heading into a lunch hour, typically you don't get stellar moves during lunch. 10 to 11 and 2 to 3 are the best times. And this is like a slow grinder. I mean, honestly, I think you can get a swift reaction off this bearish level here to get us deeper into discount, ultimately getting us into discount of our hourly range. I think the ideal blueprint for the bulls moving forward would be early next week retracement down into discount of this range. Get everybody to think the world is on fire and it's all over again, and then ultimately rip it higher from that point, right? And that's if this bullish fair value gap on the monthly plays, right? Which very well could, right? We did this over the last 2 live streams. Actually, we went back historically, and regardless if a bullish monthly fair value gap was in premium or discounted, every single time we got into one, we got some sort of bounce reaction. Now, it wasn't necessarily always this type of move where we got in and made a huge move higher, but nonetheless, always somewhat of a reaction, even if it was just a quick tick higher from that point. But then you go over to the weekly, and this has really been the game plan for a while. Wait until some sort of weekly imbalance forms, and from that point, look for a retracement down to discount of our weekly range, right? Which is way lower, right? But it's a little. I'm just a little crossed up on a higher time frame outlook right now, just due to the fact that we have monthly bullish fair value gap with a weekly bearish fair value gap. But yeah, I don't know if we're getting that 5 minute retracement there. I think that could set up for a next time around. So what does that mean? If we were to take out this low at 17,893, which we will, the model on the 5 minute would complete to the downside. Ready? There she blows. It's about to happen. And then from that point, my new range is simply set low to whatever, or I'm sorry, high to whatever this low is. I don't know where it's going to be, but that would be the sweet spot of the next leg down if we are to, in fact, get it. if it expedites and uh, blows it out of the water, it is what it is. But
What are we trying to solve? Some of these things, as you point out, they naturally push against each other. Workers having more disposable income, mandatory for the economy. If you're fighting inflation, though, it's very, very hard.
now we have relative equal lows.
They're trying to take away disposable income. What unions are trying to do is they're trying to build people's disposable income.
So given where we are on inflation, on jobs, potentially moving toward a war handle on unemployment,
So let's see.
how do you think it goes for President Biden in the election?
If you leave these behind and then get up into here, I'll feel real good about that short. But I don't think that's going to happen. I think this is going to get swept first. Either way.
We also know that the economic policy is a really important policy. In fact, it usually polls one of the number one or number two most important policies that people vote on.
Yeah, a little bit of a slow motion.
Better off today than it was 4 years ago. That's usually the number one question that pollsters will ask.
Well, thanks, CJ. Yeah, I just saw your comment. Yeah, just selfishly, I just know sitting, especially over the dry August market, sitting there all day was not good for me personally.
We've seen consumer credit get back up to all-time highs. We've seen default rates start to creep back up. So we're seeing the consumer start to feel the pinch.
But we'll wait and see. Leave these equal lows behind. Get us up into this 5 minute.
Unemployment continues to grow.
That'll be cool.
Continue to shrink. We're going to continue to see purchasing power decline and people begin to buy less wealth, and that will negatively impact the way people think of their economic position. People think about
Let's come back. Mara filling here.
Thank you very much.
thank you very much.
And here.
Appreciate it.
Let's turn to Apple. Stocks rallying today as the company
NVIDIA, no retracement into that fair value gap just yet. Tesla BPR to the downside, not ideal for Tesla. At that point, it's looking like this: 170, 629. Leave those equal lows. That'd be hilarious. And that's really where I'm just only idea at this point. Let's come back over here and see what we got. Nothing. Let's go through the list. 2,300 plus on Bitcoin here. Swept weekly lows, got into the fair value gap. Didn't quite get to discount of that weekly price run. Kind of sucks how close we were, but not it. That's fine. I know Surface is laughing. Texted me this morning. He said they're giving it all back. 511 puts. He's $2 in the money at this time. UNH is a pretty funky one. Ugh. So here's the whole UNH thing where why couldn't we just come and sweep this low? You got relative equal lows now. Like, why couldn't you just do it, man? And then you got that earnings rip. But what else? Let's see. NVIDIA still pumping. ARM also discounted there as well. What else are we looking at here? Believe it or not, Baidu having a week higher time frame liquidity sweep. You actually set up a bullish breaker, believe it or not. Low, high, lower low, break above. So let's see how price reacts to that moving forward. And that's a bullish breaker there. You'd want a little bit more continuation, maybe come sweep some of these other highs. That way you get this breaker and discount for that retracement opportunity. PNW just been a total slug. Coinbase down following the ER. Okay. Got into discount though. Yikes. Yep, got into discount. This is also a fair value gap. Should note that. Decent reaction off of that, believe it or not. It was down much more. Let's see, where are the energy names? Qpeng still a beast. Relative equal lows, you sucker. Let's see. Low 2182. Low 2182. Hate that. I think that one's coming down here too. And this would be a situation, unlike what we saw today on NASDAQ, where you get the imbalance through previous buy side liquidity, right? Relative equal highs. That's your drawn liquidity. It's your target. Mando model completes up there with an imbalance up through. You'd anticipate retracement into it and then shred it up higher from that point. So I still have shares in that. But let's see. Let's come back over. Still left those equal lows. Not bad. Okay, let's see the 5 minute. Let's see us get into that 5 minute. Left behind the equal lows. That's good. Oh, nice. Ryan's in this currently. Woo-hoo. Yeah, so he shorted the 5 minute. Yep. Yeah, it's a banger. All right. Oh, slow motion. And as you can see, the time's ticking here. We're just approaching that lunch hour, typically where things slow down even worse. But we'll see if we get this. That's really where I'm looking. So right now I have the 1 minute here, the 5 here, the 15 here. Ideally, a 1 minute fair value gap retracement here that gets us into the 5, right? It's just a way to kind of refine that range a little bit, right? 62 to 71, whereas you have this, which is 49 to 72 or 71. I'm sorry. So just a way to refine it, get it a little tighter. There's another 1 minute fair value gap here, just to be fair. But now you have relative equal lows below. So ideally, this is what we get into, and that would line us up with that 5 minute fair value gap. Not all that big of a range. By refining it lower, I should say.
Just came out earlier this year. It's the only book that's going to be sold there in recognition of the loss of Charlie Munger. The first time that this movie is being held without him.
But yeah, I think that's the really last idea here for the morning session. SMCI up also quite a bit. That one got its discount retracement. ARM got its discount retracement. AMD got its discount retracement. NVIDIA, forget it, not even close. But I'm still in the camp for higher here on NVIDIA on a medium term basis. Not saying today or not, but a little bit of a discrepancy between ES and NASDAQ. Both have that bearish fair value gap there on the weekly time frame. You got a green paint with a bullish volume imbalance there on NASDAQ at the moment. Could change. And then ES, very minimal volume imbalance at the moment, but a close below last week's high, or last week's close, I'm sorry. That would prevent that from forming. So and the question you might ask right now is, well, Mando, if you think price is going to go into here, why not scalp that long, right? It's a ton of points, right? Especially if you get it off this fair value gap, you're looking at 20 to 62. The reason why I'm not looking at that in particular is just due to the fact that we have those equal lows below. So to me, that's a pretty strong draw on liquidity there. So whoever went long here, let's just think of it logically. somebody went long here, right? Put your foot in the ground right there and start moving higher. That low is protected, and it's protected yet again here with swooping in prior to allowing those stops to get swept. So if that's the case, I think double the pool of liquidity. I buy into the idea that market is algorithmically driven. It's looking to uh, go seek liquidity. That's its job. And if it's going to go do so, you got a double pool here. So I don't feel all that safe in that situation. Right? That's the deterrent in that particular instance.
With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. The future is now open for investment.
Happy Mother's Day.
Some things never change, like a mother's love.
All right, so let's see if we can get back into that 5-minute bearish fair value gap prior to completing. You got the relative equal lows. I think that's a pretty strong draw on liquidity, ideal location to go target. Do we get up into that discount first? That's the question. Don't really have any imbalances here to suggest immediately flush, but
With the push of a button, Constant Contact's AI tools help you do even when you don't. Constant Contact, helping the small stand tall.
Invest with an advantage with CNBC Pro. All the insights that you want
and there you go. There's a little pump.
exclusive access to market experts to help you identify opportunities in any market. Unrivaled access, essential tools. That's CNBC Pro. Everything you need, all in one place, from a source you trust. Go Pro with a flash sale offer for a limited time. CNBC.com/joinpro now. Get 3.9% APR for 48 months plus 1,000 purchase loans in a 2020
All right.
finance Cadillac Financial. So you have diabetes and your glucose is heading low. Dexcom G7, the most accurate CGM, can alert you before the blood sugar. Now that's more peace of mind with Dexcom G7. So, same time next week? Well, of course. Expedia is under some pressure this morning. They lower their full-year guidance thanks to weakness in some vacation rental business, the VRBO business. Both BMO and Piper moved the sidelines today, downgraded market perform and neutral, respectively. You can see the shares right now not enjoying the morning in what is a pretty good tape, down 14%. Take a look at shares with Hasbro. The company.
Let's see. Let's go into the chat and check it out. What do you think of AUD I'm currently in this. All right, yeah, look at that. Why is your bottom anchor of the fib on the 5-minute time frame so low? It's not on the candle, is it? Oh yeah. Sorry, dude, I messed that here. That was just me explaining how when this low is taken, that's just how I would remap. So currently, this is what I have. Just for my measurement purposes, right? This is where I'm currently at, right? Your high down to your low. Why that low? We took out this low right here with that, right? So, and it's still not correct. There it is. Okay. When and if we were to take this out, right? We take out that low. At that point, I would have my new range set from this high down through the bottom of that right there. So that was the reason I had that. Sorry, I didn't correct it. All right, let's look AUDNZD. Okay, so I'm not much of a Forex guy, but we could take a look anyways. AUZ. Okay, so directionally, I'm not sure exactly where you're at. Just to be fair, this is I don't know what the heck is that. Anyways, let's do this and just reverse engineer this sucker just so okay. Not bad, not bad. Okay. Discount retracement, bullish fair value gap, run for highs, model complete. Okay, that would be your first situation. We took out this high here with this price run. Hey, yo, come on, come on, come on, come on. There it is. Discount retracement, bullish fair value gap. Oh my God, it's pure on Forex. Jeez. Okay. So to me, at this point, my draws on liquidity really would be these two highs. Now, I know we're looking at it from a weekly perspective, so it might not happen right away. But just from an overall top-down analysis point of view, this is where I'm currently sitting. Okay. So let's move it down. And this is just kind of how I would operate on any ticker. Don't matter. Now, from a daily perspective, see, now your daily range is really I hate to use this word, but I'm going to use it. I'll explain why I mean it this way. Extended. Okay. I hate using that because I think that's just a cop out for a lot of people. But here's what I mean, right? You have, what was the price run that took out all of these highs, right? Go from your low down up to, right? And you can go through each one of these and you'll notice there's no discount retracement whatsoever. I don't think there's going to be a discount retracement prior to getting to that buy side liquidity here. And on the daily time frame, you actually got into this fair value gap and you reacted pretty well thus far. So now let's move it down. Right. Okay. Very similarly, here's your hourly time frame. And we'll look at this on a much shorter blip, right? Our range as time is expanding. So if you look from your weekly and daily, your range is much bigger. Now, if you were to break this down into a smaller time frame range, we could still do so. The one thing I don't like about this on the hourly, so where it doesn't really line up for me in particular, is you have, ready, this low, whoops, not exactly precise. Let me come right here. Okay. Oh, come on. What are we doing? There you go. Down to discount. Okay. Bullish fair value gap. Check. Run for highs. That low wick today. I don't know if you have this too, or if this is just a disruption in the system. Right? I don't know. It might look a little different on yours. I hope it doesn't. But by us taking out that low, to me, that actually shifts market structure bearish on a smaller time frame on this hourly, meaning that we could retrace into a deeper imbalance on the daily / weekly, right? And if that's the case, what was the price run that took out all of these lows in the process? It's from these equal highs down to that low, right? And that's what you're currently working at. So you're right around discount. Here's your bearish fair value gap here. Oh, whoops, wrong thing. Okay. Here. Okay, you got some equal highs up into that fair value gap though, up into here, right? And this should be red. Let's zoom. Okay, now could you make the argument that this is a turtle soup move? Yeah, you can, right? Swept that low. Now we look up for those highs. There's a lot of equal highs up here. It's very clean, right? So I actually would kind of favor the upside on this. Due to the higher time frame impact. Now let's just keep on going down. Let's go to our 15 here. Not really a tradable opportunity for me at the moment, meaning I don't have any imbalance that I'm basing the trade off of, right? When you get these wicks like this, like at that point, I kind of feel like we're trading off of air. Let's go down into a smaller time frame and see. Very similar situation. Notice how there's no imbalances forming, right? And when this happens on NASDAQ from time to time as well. And that's just usually when I just don't trade it, right? But you don't have any bearish imbalances, but you also don't have any bullish imbalances. That's the key there. So with all of that being said, unfortunately, I wish I had something better for you. Higher time frame analysis looks pretty clean, but the smaller, I'm not really seeing all that much that I would personally do in that situation. So entering that 5-minute fair value gap, yeah, we're pretty close, right? So you're looking at the 4-hour pips. Let's see. You're hoping for a wick fill. Okay. Yeah. So I don't use like indicators really to determine price, but I use this one: new week open gap, new day open gap, which it just kind of highlights those key gaps that would occur on the chart. And then I had this one. I forget what this one is exactly called, but this is the time one. ICT everything. You have it set to your atomic clock, and then it'll show you. So I have it. These are sessions that I don't have on at the moment, but it will chop them up for you. So everything's broken down into particular sessions. Okay, so you're in. Let me just see one more thing. You're talking about the 4 hour time frame here. Okay. Okay, you're looking for wick fill. Yeah, I mean, I guess and if you're already in, the way I guess you could look at this is you really want this 4 hour to close like this, and you leave that bearish fair value gap open. And then from that point, let's get into it. You could also make the argument that you have a bearish breaker here, high, low, higher, high. So the low of that sequence would be here. We're currently inside it. You don't really want to close outside of that. Low of the sequence is right there. You don't really want to get above that level, in my opinion. But all right, let's come back over here. All right, so we are in the 5-minute bearish fair value gap here, folks. It's showtime. All right, let's see reaction. Okay, there's your 5-minute fair value gap. You have relative equal lows below. Did this form a 5-minute fair value gap? It's just the only question I really have. It's a low one. All right. All right, one sec. I'm gonna take a second here. Yeah, I'm on the East Coast. Yep. Yeah, I'll be right back. One sec. Oh wow. Okay, so strong initial move. Now here. I guess this is something that with time I guess I learned, but regardless, whatever trade idea that you might have in a current situation, as long as you can map that out well. And what do I mean by map that out well? Can you define a specific area in which you're going to stop out? Is there an area in which you can specifically uh, define as a where you're going to take your profits? You're not going to be right on all of them, unfortunately. That's just the way it is. And if you can do that, where it's all well defined prior to even entering into a specific trade, just think about it. How quick stop outs aren't going to kill you, but in the short term, those those uncontrollable losses will, right? But those smaller losses, those can be reclaimed rather quickly. So look, we're back into that 5-minute bearish fair value gap. Now here's the question: are we just gonna turtle soup again? That's another fair question to ask, right? Will we close back inside this 5-minute bearish fair value gap, right? With a sloppy wick, right? It's a possibility for that as well. We got relative equal lows below on a smaller time frame at least. We can pull up ES too. Yeah, no problem, guys. All right, let's go. Let's pull up ES. See how the setup is there versus. So ES did turtle soup. See the difference, right? There's a discrepancy, and there's the one unfortunate divergence between ES versus Nasdaq at the moment is right now on ES. One, you don't have relative equal lows below, and you don't have relative equal lows here either. You have a discount bullish imbalance. Okay, and you're actually creating imbalances on this run higher, right? You're turtle souping this high, so we're about to find out who's the leader, ES or Nasdaq. And ES's 5-minute fair value gap isn't until here. So do we see SMT divergence, meaning do we see ES take out a high or not take out the high while Nasdaq does? The imbalance through this imbalance is not ideal. So it's kind of starting to look like Nasdaq wants to take the high. ES gets into this, and then from there, we'll see who's leading the pack. But there's absolutely divergence between these right now. If I had to guess, ES gets up into this bearish fair value gap. Nasdaq takes a high, and then from there, that's where the fun starts. Closing above this is not ideal, and making this imbalance here through previous. This is a balanced price range as well. So stop your price action today, but BPR on either in both directions. Not the most ideal situation.
Is this your dream of retirement? How about this week, Gabe? I like fishing. Or is this a little more?
Where is it? We're just about back at that 988 too.
It's easy when markets are going up. What about when they're not? That's why you need
ES holding on to the new week open gap. So that's why I use this on the chart. For whatever reason, a pretty powerful level.
Fisher Investments' disciplined approach will help see you market in down and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better. Call now for your free retirement survival kit. 1-800-213-5317. See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call.
So you create that 5-minute. See if you get some sort of retracement for that little run higher. I think you will see SMT. Let me see. Whoa, look at that. Deep on a YM in comparison, right? Massive, but the YM bearish fair value gap isn't until here. Lots of divergence today. Right.
Changing international tax rules. From planning and compliance to transfer pricing strategies, co-residence advisors can put you at the forefront. Get ready to change the game. With absorbing and growing, paying what holds you back from your pensions is the only solution to extra risk. Half of what I paid before. Go to Harry's.com/TV to claim your $5 trial.
Big weekend on deck for Formula One fans with Miami Grand Prix set for this weekend. One of the biggest names in tech is making an even bigger splash in motorsports. That is HP, completing a multi-year title partnership with Ferrari to be featured in the team's name and branding. We are joined now by HP CEO Enrique Lores.
I'm leaving the equal high here.
Good morning, Sarah. Thank you for having me here.
I mean, forget the Fed.
Please sweep it. Here's a 5-minute bullish fair value gap on NASDAQ right there.
Sponsorship spot on Team Ferrari. Why?
Well, you know that one of the most important assets that we have in the company is the HP brand.
And we're right back at that 988.
Growth and momentum that Formula One has had, the connection that we have with technology, the number of followers that they have in the world, and we thought it was an attractive area for us to invest. And with the opportunity to partner with Ferrari came, we thought it was the perfect combination given the focus
Okay.
on engineering, the common values that they have, and we're really pleased with the impact that we think this is going to have in our brand.
And how does it work?
See Tesla sweeping that low again.
I don't know if you're willing to share the cost of what a multi-year title
Looks like setting up for some heartbreak.
How much and how does it work? What do you get?
We don't disclose the details of the contract, but you can see this partnership impacting two different areas. One is what I mentioned about the impact in the brand, the visibility is great. As we have discussed before, we have a strong ambition to grow in the premium categories, so this will definitely help us there. We have a strong growth objective in gaming.
Yep, ES and YM fair value gap well above. I think there's a chance you see NASDAQ sweep the high one more time and then flip to the other side of things, and you see ES get into this bearish fair value gap and Dow do the same. Where's Russell? Similar, right? You see how much stronger that NASDAQ is versus the rest. How much closer to those highs it is versus this. Look at that difference. Big difference. You know what? I've neglected this a little bit today. I want to take a look. Let's take a sneak peek over here. All right, so our dollar's close. Let's see. I always go through a more recent price run. That way I make sure I have my range all set. Turtle soup, run for highs. I think I actually used that for one of those long short things that I do. There's that. Okay, and you got a massive range currently on dollar. Yep. And relative equal highs. So I'm not so sure this is done pumping just yet. But the question is, one more flush on the dollar give you more run to NASDAQ, just enough for us to get into that bearish fair value gap on all of them. And that would be, I guess, my question in that situation.
Formula One is a global sport, is the fastest growing global sport, and as you know, we are a global company. It's a sport
this little price run that we took out that high with was high. Doesn't really line up.
And finally, if we talk about the segments where we want to grow, premium categories, gaming, and younger generations, emerging countries, they have a very strong presence.
Not quite. Let's just see the reaction to the 5-minute fair value gap on NASDAQ here.
What about broadly on technology? I know you're quiet here, but you've been working on AI PCs, and I guess I'm just wondering how it's going, Enrique, and when it's going to be more mainstream.
Well, we continue to be very excited about the opportunity AI PCs are going to bring. But we can share, we will start introducing our
new 5-minute candle paint. We're chilling inside this bearish fair value gap. Ideally, you wick down into here prior to moving higher, but I think this is just setting up for a pure SMT situation.
Is it about getting the right chip, or is it about having a killer app? What is the spark that gets it going? Besides just the release.
From first the chips, second the products, and then we need all the key software companies to take advantage of the new capabilities that the hardware is going to have. And this is part of the effort that we are doing.
Sorry, I haven't been looking at the chat much
Possible to do.
in the group.
Here they can bring to the customers, and we see applications all over the place, from gaming to productivity tools for the office to translation tools. We see that
Nice job, Sean.
one of the biggest changes that we have seen in technology in many, many years.
Enrique, thank you very much for joining us on this deal. Very exciting. You even get Lewis Hamilton next year.
Melski's going crazy right now.
Appreciate it. Good luck this weekend.
Thank you, Sarah. See you maybe here in Miami.
I'll be there, of course. Enrique Lawrence of HP. Ferrari's looking good lately, too.
We got an upgrade today over at was it Morgan Stanley?
Oh, the stock? Yeah, just keeps going on.
Meantime, Stifel turns bullish on one name in the transport sector. We'll tell you what it is. And one more reminder about Berkshire this weekend, the annual shareholder meeting taking place tomorrow, and our coverage begins at 9:30 a.m. Eastern Time, right here on CNBC.
All right. See, chopping around a wee bit here. Let's just look here.
Happy Mother's Day.
Some things never change, like a mother's love.
6. Yeah. All right, let's see us get into that fair value gap here on the 5-minute.
What I look for in a contractor is someone who is reliable and skillful. That's where.
And the best cue for your day to be done would be if we melt this and balance price range down. That would be the best cue. All right. Ticked into the fair value gap. I think a little deeper line up with this 1 minute as well. Slow, chop, rangy. There's your dollar, not forming any imbalance higher. Actually inside a bearish fair value gap here. You get answers filled, but no rejection just yet. Just much slower. Time of day does not help this, right? That we're approaching the lunch hour.
Instead, your calls are answered by real people who know you by name. You're empowered to help.
Alrighty.
Sometimes investing can feel like you're going at it alone. Especially when it comes
Mara balancing at a discount right now. Apple kind of coasting after that big move. That doesn't help the speed of what we're looking at on NASDAQ at all. Tesla looks like it's going to form that hourly fair value gap. So it's got 10 minutes to form up to 181.41. If that's the case, then I'd anticipate that 176 getting a little sweep. And the video also still relatively strong. Again, without that bearish fair value gap, it doesn't necessarily make me feel like we need to come down to discount just yet. This is a 1 minute fair value gap inside. I'll just draw the 5 out. Just slow-mo. That's all.
Welcome back. Take a look at stocks right now. S&P is up 1%. We're off the highs of the session, but still strong and and broad gains for the morning. Tech is leading the charge.
Tech is leading the charge. Hey, I said that. Maybe you should work on CNBC. So can we justify this moving from this point? For sure. We did tag the 5-minute fair value gap. Not exactly where I wanted it inside that 5-minute. It just makes for a much larger range. It's 30 points. Swept these lows down here.
ETF up 12% in a month. That's when Money Movers comes right back. We empower those who act. We want to see correlation between upswings and downswings.
Okay.
Those who manage risk by meeting each obstacle.
So 5 minutes satisfied. Here, I'll draw it.
A measured approach.
There. Inefficiency here on the 1 minute. That little gap we just got into. Dollar doing nothing. Okay. Let's see. Pump through. $9.88 again. The headache at $9.88. About to get into that lunch hour. All right, we're over 988. Clearing this imbalance here, bulls would want something called the low resistance liquidity run, meaning that we kind of scoot. There you go. Bulls want to see a scoot. Move relatively quickly to that liquidity. And again, that will line up with your ES potentially filling this completely, that bearish fair value gap, and YM doing the same. All right, let me remove some of these. Mounted that 988, so that's a plus at the moment. Okay. Ooh, is that a 5-minute volume imbalance in the making? Did we gap up on that 5? We can look closer. We did. Okay. Would not be shocked. So an up close is very bullish. Like that. Again, we're above that level now, so bulls want to see this swiftly move up to those highs again. An Up close on this 5 is encouraging. That's a gap up showing you urgency to move higher.
It may be part of a broader market thing, guys. What they call
No.
the long AI, long Japan, short China trade. Weakness shifting certainly underscores that. Names seen as AI beneficiaries like AMD, Broadcom, ARM, Qualcomm, they have underperformed the broader market over the last month. Nvidia too is in the red over that period.
1 minute fair value gap here.
That's China's largest chip maker listed in Hong Kong, has held up relatively better, and it's really the big Chinese internet names, Tencent, Alibaba, JD.com, PDD. They have been leading the rebound, suggesting that China's own AI trade may be gaining momentum. Of course, guys, we have certainly been here before. There's always this
So a little speed to the downside on dollar would be great for those bullish, but a little slower, a little slow day. ES approaching bearish fair value gap here. YM still a ways away. I believe Russell is as well. Yep, real far away. So 3 minutes for bulls to create an up close here.
China is trying. One data provider counts more than 260 startups competing to build homegrown alternatives to our Gen AI.
And here I'll show you what I mean by that here.
Another potential data point here. China sales, they're falling in counterpoint.
Microscopic, but
Citing the absence of major advancements in hardware and performance as a reason to refrain from getting a new iPhone. Huawei already offering all raising the stakes for WWDC. Speaking of China, with some
so far so good. 2 minutes to close up.
EV supremacy, at least in the 12 cents. It's another reminder, that there's
NQ hourly.
of technology and that Chinese
Nvidia's moving a little bit for us.
compete with ours. We've seen the EVs, right? The likes of BYD and some of the others that have given Tesla a run for their money and has led to these price cuts.
And I'll just mark buy side right there.
Artificial intelligence and back to that research.
1 minute order block. Take what you will with that. A minute and a half to close above, close up, create that volume imbalance higher, showing you urgency to move higher. There's no fair value gap going to form, I don't believe. If so, it's going to be really small. Yeah, it's really small. Your 15 is painting a decent one here with a minute on the shot clock here. There. Low of that candle would be 46. The low of that. Fair value gap. Not closed yet. 1 minute.
With regard to the Fed and inflation, and then some AI discussion as well. You can imagine that's quite high on the agenda.
No up close here. Check that. No fair value gap either. 40 seconds left. Still a chance, but the fair value gap's out of the picture here. 15-minute fair value gap still possibility.
And also, the analyst community and investors have been optimistic on Citi itself as a stock and a turnaround story. Fraser's just come off of this big restructuring. The last time we spoke to her was back in Pebble Beach.
88.
Where she was on the brink of
Will we respect it this time around?
The business, a lot tighter and more nimble. So I'm curious to ask her how it's going and when we're going to see results. Meantime, we'll fly back into Fed speak. We got Williams tonight, I believe, and then next week it's earnings aren't going to stop necessarily. Disney,
no volume imbalance.
Yeah, I think earnings take a front seat backseat on economic data until the week after we get CPI on the 15th. So enjoy the weekend. Let's get to the judge.
15-minute approaching.
Carl, thanks. Welcome to the halftime report. I'm Scott Walker, front and center this hour, searching stocks following Apple earnings and what might have been a perfect jobs report for the Bulls and the Fed. The investment committee debating that like we wrote into the rally. Joining me for the hour today, Shannon Sakosha, Kevin Simpson, and Steve Weiss. We're all in Post 9. Happy to see you guys. The shipping markets were great across the board. This surging stock market, while the yields up part of the story here. And what I suggest, Weiss, really, I think,
All right, 12.
Job additions below estimates, hourly earnings below estimates, unemployment rate rises slightly, yields fall, stock surge. Is it really any more complicated than that? It's not. And you know what?
See 15-minute get tagged.
Perfect press conference from Powell. But I think we had a really, really good one, and I would say very dovish. So you take that, you take the report today, and that's why the market's up once the last few days. And frankly, now that we're out of the woods, at least for now, and we're always going to be like the Fed gate to evidence, you sort of got the all clear.
Thought on Mara current PA? Oh, good. Mara being manipulated by I disagree. It's just how the market works, man. Discounted bullish imbalance right here, no problems at all. Just to be fair, just in case you guys haven't seen any of my stuff before, you can go through every single one of these walk-ups and you'll notice there's a recurring theme here. Ready? Low to your high. Here's your discount retracement for a run through highs. That's one. Low to your high. There's your discount retracement into a bullish imbalance. There's your run for highs. Two. Okay. One. Two. Whoops. There's your range setter. Discount retracement, bullish imbalance, run for highs. So it's just how the market works. So MMs, if they're out, if you mean MMs by algorithms, I'd agree. But yeah, not worried about this. All their setups look great. Nothing has changed. So now, what was the other thing in here? Yeah, it's just a recurring theme. So yeah, that's where I'm at on Mara. Bullish imbalance right here. You got one more down a little bit lower as well. But look what happened the last time you got into a bullish imbalance on the hourly time frame. No problems. So a lot of relative equal lows here on the 1 minute. Respecting this far, you got 1 minute bearish fair value up here. I'd like to see the rejection move us down below these equal lows and then into that 15-minute fair value gap. Doesn't necessarily have to happen, but that would be preferable for a run back towards those highs. Something like that. This would be the most ideal. Sweep these equal lows and then get up and get going. That would be ideal. Looks like you want to create another 5-minute bullish order block here. Just makes it much more untradeable in that situation.
Which we all expected. Imagine if he hadn't pushed back on rate hikes the way that he did. Imagine if he hadn't said there is no static, there is no inflation. I mean, to me, that was just an awesome meeting. And then to look at the jobs report today, which I have now point on it, it is a great way to end. Now I think it's perfect. Moving forward, we're close to perfection. I don't know that we're going to be overly aggressive buyers, but you can certainly be way more optimistic than you could have been.
Okay.
So certainly not out of the woods. Right, there's some issues the market's going to continue to work through. I go to Goldman's pre-jobs report.
All right, so far good. The reaction that I'm anticipating. Right. It's the best we can do, right? Anticipate, think ahead, think what is logical, think about what can make sense. And that would also offer some sort of opportunity, right? Because at this moment, even if we were to say just shred it up to those highs, I still don't know, and I don't feel as good about taking that trade in that situation due to the fact that we have all these equal lows down below. We have an open 15-minute fair value gap below, right? And if we are eventually going to set our range, I'd prefer that to get rebalanced prior to anything crazy occurring, right? So that would be the most ideal situation for me. Lots of equal lows down there. Got a 15-minute bearish fair value gap, or a bullish fair value gap, I should say. But and we're still hanging out right at that 988. You see how sticky, right? That's previous liquidity. It's a bit annoying, but we're running for it. See, look at all these equal lows. I hate that. That's fine. If it runs to the highs, it is what it is. But not all that tradable for me. I've seen way too many instances where those get left behind and they get targeted, shredded. So you'd be in a nice trade to the upside and then violently comes down for that liquidity here and here.
Is this train going to have some struggle? Do valuations need to correct more meaningfully than they had?
Weekly still painting that volume imbalance, gap higher.
Even though they've struggled, the struggle has not been, gargantuan. Aside from that correcting down to
Always the close, like we're looking at right now. Still 5 hours to go, but that's what it would look like. Let's just remove that for now. Show what we're targeting.
So to Tony's point, and he's phenomenal, he's got a great track record, and more important than his conclusion.
And the lunch chop ensues.
I like your thought process. This is really good. But what I'd say is that
Hold on, I'm gonna take a few seconds. I'll be right back. All right, back. Okay. Yeah, no worries. I am game. I just saw your message there. Yeah, this is Chop City. Chop City. Okay. I'm gonna just I'll leave it, whatever. Oh yeah, but we're just hovering right now. Slow, lazy, lunchtime. Nvidia is still pumping. Tesla's in the bearish fair value gap on the hourly. Mara chilling. Did Mara create a very little one? Maybe a small imbalance there. But here, let me go to the 15. We can just chase, but ideally we'd get in here first, kind of like how I had it drawn down first.
Is this a we put our flag in the sand here and say this was the moment that we're confident that Apple dropped, both in their revenue, both in China, both in they haven't even talked AI yet. I mean, it's sprinkled, but they're going to deliver the entree in June. If not now, when I guess is my point. I still thought that we were going to see a bit of
Chop.
But when you can never pick alternate bottoms or alternate tops, so anywhere between 150 and 160, that's not the bottom. Between 190 and 200.
Okay, come on, just give us that move down into that 15-minute fair value gap.
That's great. But what do you think? And that's it. So
Fill this up. Yeah, so relatively muted morning. I mean, when you have a big gap overnight, usually that leads to some slow-mo morning session, not necessarily the afternoon. Maybe we'll see some fireworks here in the afternoon, but this is really what I want to see, though.
you're talking about a product company that, I mean, and services obviously, but AI may very well be what
Right, and that would create the divergence between NASDAQ and the rest, where one takes out a high, one does not. And by one, I mean 3 of the other indices. Again, ES got into the fair value gap. That's about it. YM still chasing. Or actually, I shouldn't say that. Looking at it from a 15-minute perspective, you have YM here. And then the Russell, you're well below at the moment. There. What I had was the 5-minute. Oh, we can look at it from that perspective. Right there. So.
Microsoft with recurring revenue with significant pricing power, rather than relying on the telco companies.
That's some continued slow motion here. We took out these lows right here with that wick. There's your reaction. Oh, volume came in. Did it really? But these are the lows. I think those would be ideal. That gets you into that 15-minute fair value gap. Nvidia still churning. Apple still floating. See dollar chilling. That's not ideal.
mean, if you look at the big tech buybacks and the new authorizations, okay, so it's 110 billion from Apple. I mean, Google 70 billion. That's new authorization, Steve. I mean, you can pick on that. Meta's 50 billion. 50 billion. Microsoft, there's unchanged in paying 13 billion. 10 existing companies with amounts of cash. Where are they going to put the cash?
I like buybacks, but I like the fact that does increase their market, increase their spending. Much more accretive to earnings and have longer staying power than a share buyback.
A little more boring today, but it's all right.
Buybacks, they still have great growth. Apple hasn't had that growth in a long time. Would you say 6 down quarters? You can go further back and see it's been flat for a long, long time.
I just think, you're going to look at a moment like 22nd.
Dang, Ivan.
For the first time in 6 years, ahead of the earnings, by the way. Good on him. By the fear is what he said, and that's obviously by virtue of the stock performance today and the earnings last night.
The rationale for why I think AI needs to become more relevant for the installed base that Apple.
Oh man, just slow motion crawling here. I don't know how much more I got left in the tank here on this. Is anybody looking at anything else? I think everybody's in the same boat here. Just a total snoozer. Let me go back over to the big list here. Bitcoin's still up decent. Roblox having a day. Roblox setup has not changed whatsoever. Where is it? It's over here. Yeah, it has not changed at all. So I like that one. Mara, same situation. Upstart.
JP Morgan, they raised the target. Melius raised the target. It's time to buy, they say. Ives is bullish. I know that's not a shock to anybody, but he's reiterating.
Corvana is just an absolute monster. Insane.
There's nothing wrong with owning Apple, but again, I've got to pick and choose where I'm going to get the best performance. And to me, if what you're saying, to read it's what you're saying, if Tim Cook didn't
the sweet. Come sweep these equal loads. How about it? It's gonna make us wait forever to do it.
He's running a quarter to quarter. Think longer term. Who cares what the market does in 1 quarter?
You're telling me, and how many? You're telling me that Apple quarter to quarter.
You know what I'm saying? That's what was the comment. That's what
I think you're responding to what I was saying was I do think that they're going to have a very well articulated AI strategy. There's no doubt in my mind that Apple's going to have that. I think in this moment, however, the inflection point for them is they came into an earnings season where China wasn't as bad as they thought it was going to be, where they had strong services.
Starbucks is a real clunker, huh? Sheesh. Dumpster fire. Complete dumpster fire.
Now they're giving you dividends too. So,
And it's a different universe.
Google almost all now, which is why Barclays said that the earnings that have come out are going to continue to lift the growth trade higher, and that values outperformance over growth from March to mid-April is reverse course, and we expect this to sustain. That leads me to the broadening trade, which again felt good while Megacap was pulling back. Well, they say not so much now. Maybe energy is a perfect example of that. Have you seen that? It was a great trade. It's looking like, I don't know, is it done? Why is the worst sector this week? The worst sector this weekend month?
Yeah, I mean, take a look at a 10-year chart, right? You've done an awful lot of work on Chevron to be running in place over 10 years. So you've got to trade, right? I mean, there are dividends that could maybe increase that. But look at the charts of any of the mid-cap technology stocks. It's a new world that we've been living in for the last decade, maybe more. And, do you really want energy to broaden your
If you really want to believe the thesis and energy, I'm going on a convention how many times I've heard 200.
Oh, all right, there we go. There's the lows. Come get them. Relative equal. All right, price run. Let's see. Okay. Just get into the 15-minute already. Oh my lord. You're still in here watching. Respect. I just want to see the reaction to the 15-minute, and then from there, call it quits.
So speaking of being diversified, the broadening trade, TJX, you bought more. We'll do that before we take a break. But give us some insight into why you leaned into this one. Real quickly, if we see the consumer trading down, so we let off brands.
Open this hourly right at that previous liquidity. Ain't that something? Let's see if we get a change of pace here. ES. ES is 15-minute is much lower. Whereas YM. YM had a volume imbalance on the 15. RTY. And not much cooking for RTY. You gotta be shitting me. You couldn't just take the damn low. All that's doing is just prolonging this. Prolong the inevitable. Bounced.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
It doesn't matter to him that our technology helps rebalance his portfolio. She doesn't care that we work with billions in assets. And they aren't even aware that we spent over 2 decades focused only on our earnings. We understand what really matters to your clients.
1 minute breaker. Low, high, lower, low. All right.
It's our mission to always be there for you.
All right. Well, I think I'm going to wrap it up here. So for anybody who joined, appreciate it. Hopefully it was insightful. But I'm going to pop off, and I will catch everybody next time.